Now, there are times whereby the market behaves completely illogically and detracts from reality, which may cause you to be a little bit anxious about what's going to happen next as we move into a more uncertain future, right? And naturally, some of you might give in to the fear and sell off your investments. In today's video, let us address the question of whether or not you should sell everything and stay away from a potentially unsustainable market. My answer to the previous question is, of course, wait for it. No, right? You should not sell off your investments completely, but you should take active steps to manage your risk. Now, those steps may come in two forms. You can either sell off parts of your investments and keep it in the form of cash, or switch part of your riskier investments like equities into less risky investments like bonds, right? The reason why you want to do this is to protect your investments from a potential price decline. And as if that happens, only the amount that is invested in the riskier assets will be affected. At the end of the day, whether you should or should not increase or decrease your risk exposure depends on whether or not you feel that the current market situation is sustainable. And that requires you to do your own homework and come up with your own conclusion, right? And if you feel that the markets are sustainable, you may be better off investing more or not doing anything at all, right? If you feel that the market movements are not that sustainable, you may want to consider lowering your risk exposure. Let me give you an example, right? Back in 1998, when the dot-com bubble was forming, a few people were advising against investing and participating in a severely overvalued market, right? While the signs were clear to some, most investors didn't really care about whether or not the price movements were sustainable, and as a result of that, the markets actually climbed another 31%, right? But eventually the market collapsed and price dropped about 50% in order to go back to its normal levels where it can be supported by proper fundamentals. The same can be said for the 2008 financial crisis, right? The S&P increased by a good 18% before it came crashing down by 57%. So what can we learn from these two episodes? The first is, of course, while nobody can time the market perfectly, there are clear warning signals that investors should not ignore when the markets are reaching unsustainable territory. Number two, it is always better to miss out on potential returns than to sit through the eventual crash that will happen when market corrects itself back to normalcy, right? So back to the question of whether or not you should sell everything and stay away from an unsustainable market, my answer is no, right? You shouldn't sell away everything because you may miss out on potential gains in the future. But that doesn't mean you shouldn't manage your risk exposure and take profits from time to time in an unsustainable market. Doing so will allow you to participate in profits while managing your potential downside losses that you may suffer when the eventual price correction happens. Having diamond hands is important, right? But it's not really the solution to all your investment problems, and you should base your investment decisions on logic and facts instead of succumbing to like your emotions and herd mentality, right? So that's all I have for this video. If you don't know how to get started with your own investments, or maybe if you don't have time to manage your own investments, I would suggest that you engage someone to guide and manage it for you, right? You can check out my work and services on my websites and get in touch with me to find out how we can work together to accelerate your financial growth moving forward, right? That's all, and I hope to hear from you soon.